me just a second, I'm having some connection issues here. Just a second, YouTube. Looks like you can. Alright, so for some reason I can't connect on Instagram. Alright, so let me know if you can hear me on YouTube, man. That is not cool. Alright, you can hear me, man. Just a sec. It's always a pain in the ass trying to do this stuff mobile, man. Nothing ever connects right. Okay. It must be this phone. Fuck. Alright, just a second here. Alright, now I'm back in business. Back in business. Maybe not. Wow. No, I don't understand, because I'm connected on YouTube. It is not connecting on Instagram. Give it one more shot. We'll give it one more shot, man. I know, Tony, but you gotta make a living, bro. Gotta make a living, man. All right, yes. I'm gonna turn off commenting on Instagram if the some reason the connection on Instagram is not holding. If not, go to YouTube or go somewhere else. I don't know what to tell you. We're gonna turn off comments because comments tend to be too stupid to comprehend on Instagram on Sunday service, and we're in church. You don't need to say anything. Just listen. So, in the book, The Science of Getting Rich, in like the fourth chapter, or fourth paragraph, it says, fourth paragraph, first chapter, success in life is becoming what you want to be. That's it. If you're being what you want to be right now, you're successful. You can become what you want to be only by making use of things. And you can have the free use of things only as you become rich enough to buy them. To understand the science of getting rich, therefore, is the essential of all knowledge. Meaning it should be everyone's first interest. Now, it's not for a lot because a lot of people give up. They don't think you can get rich unless you're a movie star, an actor, own some big fancy business, or do something. That's not true. And you don't need something for nothing. The universe is so aligned that it wants to give you what you want if you sincerely want the thing that you say you want. Stocks are no different. And the money flow is not about prediction or direction. I don't believe anybody can predict or direct. Now, I do think when you come to the stock market when you're new, you're going to disagree with that, and you're going to seek out people you think know direction of the stock market. It'll take you a while before you realize nobody really knows. Now, you think you do. Everybody does. They think they know something. They don't know shit. You don't know shit. I don't know shit. I don't know what's going to happen on Monday. For all I know, Vladimir Putin launches a nuclear bomb, and all those plans you have go right out the window. All those ideas you had, just like that. It's over, man. So we live in a world of chaos, and stock market is one of those things where it's in an environment of chaos. And as much as people want to make rhyme or reason of it, whether it be positivity or through fear, they really don't know. But we can step back, and certain things we can just determine to be true, like it can only do one of three things. Nobody can disagree with that. It can go up on Monday. It could go down on Monday, or it could close where it opened. In other words, go sideways. And that's all price can do. And I know sometimes we think it means a lot, We think it means something. Each day, price going up and down. But most of the time, it really doesn't mean much. It really doesn't. Most of the trading and the selling activities inside the stock market are robotic. They're computers going back and forth. It's not people like me and you sitting around thinking. It's not that. That's not what's happening at all. Prices don't go up down based on logic or fundamentals. Over time, they do. Over time, things that are valuable sell for a valuable price, and things that are not valuable, over time, everyone realizes this is actually not valuable, and it goes down. And we have things like, they call them meme stocks. We've always had meme stocks. We've just decided to give it a new name. Where something that really isn't valuable, the herd or the crowd or people or promoters or influencers or whatever decide to make it valuable. And then other people who chase it, and it goes up and up and up and up and up and up and up, and it goes to ridiculous prices, and that'll never end. And 10 years from now, there'll be meme stocks and ridiculous things that sell for stupid high prices, and there'll be things that drop that are very valuable, very good things, and they fall to ridiculously low prices. And you, as a human being, can step back and you can use that volatility of prices moving up and down to take advantage of it. And if we're looking at this chart, this is the S&P 500. Goes by a ticker symbol. The one I use is the SPY, S-P-Y. You could do the VOO. You could do the, what is the VTI? That's the world market or whatever. But there's all kinds of these. The SPY is probably one of the most publicly traded instruments of value in the world. Think on that. There were on Friday, 95 million shares changed hands on this. This is the composite average of the 500 largest companies in America. And there are people, sadly, that don't know what this is. They have no fucking idea. I don't need feedback, bro. Just listen. They have no idea. They go through life not knowing what the most valuable financial instruments there are. The S&P 500 is one of the most valuable financial instruments in the world. Okay? As are bonds, as the Dow Jones Industrial Average, which is a composite average of 30 stocks, right? And as we go through, what we can try to do with this madness is try to plot and try to make sense of it. That's what charts can do. I don't believe you can predict direction with them because I don't believe anybody knows direction. But I do think you can begin to make sense of it and interpret what you're seeing. And what I'm drawing here, some people call them pivot points. Sometimes they're referred to as anchor points. Just depends on how you're using them. And it's where price does what I just said, where it runs up, stops, and then runs down. And you can only do one of two things. So if we were to take a marker and connect these, and we just connected dots, right? You just connected dots, like a fourth grader. See, kids are pretty good traders because they don't add a lot of bullshit. They don't go to YouTube and read a bunch of dumb things and come back and have some philosophical view of the world or some conspiracy theory or some grand fucking vision. They don't do that. Kids don't do that. So if I gave a kid a marker and I said, hey, just connect these dots, that's what they would do. Most kids would start connecting the dots. And what do we see? If I was to ask you, does it look like it's going up or down? Looks like it's going down. Not very complicated, right? And that's what charts allow us to do, is to go through and do this. And that would be a downsloping channel, people call it. And you can get into all kinds of things, head and shoulders and blah, 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 and this and that. What I've found is you want to try to simplify that. Now, in the beginning, a lot of people, no matter how many times you stress it, they believe that you can interpret price direction. Some of my best friends believe that they know the direction of the stock market. Now, they're delusional. They don't. But they think they've come up with a way to trade or a strategy that allows them to predict direction. They haven't. Sorry. Hope we can still be friends. You have no fucking clue where the stock market's going. And yet, inside of that idea of I don't know direction, right? That doesn't mean I can't take advantage of what's being offered or opportunities that are given to me. And I can do value assessments. Not that complicated. I can assess what is valuable. How do you know if gold is valuable? How do you know if a bond is valuable? How do you know if a piece of real estate is valuable? I'm in a beach condo right now. I'm looking out the window. There's the ocean. What makes this valuable? What makes it valuable is I'm sitting in a table and I'm looking at the ocean. And if you want to be this close and you want to look out your front window and see the ocean, it costs a lot of money. That's what makes it valuable, right? Well, every stock, there's some reason that makes it valuable. And as we go through the market, you're going to see Stocks that pay dividends have a different kind of value, right, than a stock that doesn't pay a dividend. There's different types of stocks. There's biotechs, and there's penny stocks, and there's growth stocks. And one of the most common things I've been getting asked recently, could you look at my portfolio? It's really gone down. And then I look and it's all growth stocks. Yeah, no shit, bro. Of course it went down. All growth stocks have gone down. So if I'm asked that question, I know this person has a complete disconnect from fucking reality. Like, what was it supposed to do? If the asset you own, if all of them are going down, why would yours not go down? Right? It means they're disconnected. So if we back up on this chart here, if you're looking at this is a daily S&P 500 chart. This is a daily S&P 500 chart. And if we back this up, just back it up a little bit to where each one of these bars is 1 week. Monday is the open, Friday is the close. That is one entire week of trading. So if we back this up right now and we look at the market and we were to draw our pivot points, or what I might call anchor points, that's the highest high, right there. And where's the lowest low? Well, the lowest low was February, 22nd, 24th, Russia invaded the Ukraine. So this was our highest high, and this is our lowest low. Now, if you back up on the grand scheme of things, I mean, a lot of these stocks have gone up pretty high. And, if we back that back, the lowest low was back here. That lowest low was the COVID crash. And so if you look at the COVID crash, you'll see what happened, right? There was the highest high. This is back in March of 20? And then what? Everything falls apart. Then what? We actually hit a bottom. And if you look, you'll see 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, about 6 weeks straight down. Catastrophic fall, by the way. What are we seeing now? The fall's not quite as bad, not for the general stock market. For growth stocks, it has been. But we've got 1 week, 2 week, 3 week, 4 week. Technically, that was up. Not much. And then so in my mind, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Basically, 11 weeks, the stock market has gone straight down. Not straight, because obviously we've had a little bit of bounce backs, as we tend to do. Is this unusual activity? Not really. Not really. So one of the basic, this is a weekly, let's back this up. If we go to a monthly and we had a really big picture, it really hasn't done anything, right? If you back it up even further, it really hasn't done anything. Now, if we were to look at the stock of Pepsi and not an index, let's look at Pepsi. Really hasn't done anything during all this. Really hasn't done anything, has it? Not much. If we put it on a weekly, we get a little bit more movement, right? A little bit more up and down, looks a little bigger. So on that monthly, it didn't really look like much. But if you come over here on a weekly and you looked on this on Pepsi, watch this. 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7, 8, 9, 9. So back in the beginning of 21, Pepsi had what? A 10-week move down. 10 weeks straight down. It's pretty aggressive, man. Pretty big move. Then look. The COVID crash, look what Pepsi did. Big crash down, right? Now what? Pepsi's moving down. So we've had 1 week, 2 week, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7 weeks, 8 weeks where Pepsi stock has gone down for 8 weeks. Is that unusual? Unheard of? Nope. So, what's happening is normal, right? Let's see. Let's get back to a daily. And then as we bring this into a daily, it looks even more brutal. It's fractal. The money flow is fractal. Fractal's a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over in an ongoing feedback loop. Driven by recursion, fractals are images of dynamic systems, the pictures of chaos. Geometrically, they exist in between our familiar dimensions. Fractal patterns are extremely familiar since nature is full of fractal patterns. For instance, trees, rivers, coastlines, mountains, clouds, seashells, hurricanes, etc. are abstract fractals. Simplest example would be you walk outside and it's cloudy. Oh shit, it might rain. You don't need to be a meteorologist to read the sky, right? Same thing in the stock market. You don't need to be a licensed stockbroker to see something. So what these indicators do, if you look at this green line, if you just look at it, now we did the fractal pattern. We did what we called I'm calling them anchors here. You might call them pivot points. The highest high and the lowest low, right? But look at that green line there. That green line is the 20-day simple moving average. What direction is it pointing? Meaning the point of it. And if you notice something here, it starts to go sideways and then it turned down. And if you notice over here, it started to go sideways, then it turned up, right? And over here, it started to go sideways and it turned up. Well, if we were looking at these zones where price turns up, turns down, these other you see these little dots here? These little dots. These are what I call minor moving averages. Or if you have my book, The Money Flow, I talk about the 5-day moving average being in the 5-day EMA. EMA. Exponential moving average. Right? The EMA. That's our trigger. And what I'm really looking for on that is, yeah, the crossover is important. Like right there is important. But what I'm really concerned with is on what side of the moving average is it on? Is it on this side of the moving average or is it on that side of the moving average? And if it's on this side of the moving average, right, guess what it means? It means price is going down. That means it's going to keep going down. It can't go up, right, until what? Till it's on this side of the moving average. So these indicators and these moving averages, all they're letting you know is, nobody actually gives a fuck what you think, bro. Like, I think this, nobody cares. You're not invited here to share your thinking opinions, right? Like this guy's asking about Google, comes to church. I'm explaining to him how to understand all stocks. He wants to know about a stupid stock split. This is what new people do. This is what amateurs do when they come to the stock markets. They chase dumb things, share their opinions. None of that matters. Nobody cares. It's not going to help you. So, okay, we could sit and waste our fucking time talking about a stupid stock split. You know how stupid that is, right? It really is, dude. A stock split is, hey, let me give you 4 quarters for your dollar. Look, now you have 4 shiny things instead of $1. That's better, right? That's a stock split. So now that you wasted our time with your dumb question, and you should take that to heart. I mean it. Like, be quiet for a while. Sometimes just stop talking. Like, don't have an opinion. Just sit there and just watch it happen. Most everyone I talk to or try to talk to don't shut the fuck up, man. They just talk and talk and talk, and they don't know anything. They don't have, their opinion means nothing. They just talk and talk, and they just have this unlimited filter of listening to themselves babble endlessly while they struggle in debt. They don't have no money, haven't done shit, but have lots of opinions. So you should spend until you're about 40 just listening, taking in, learning, seeing what is bullshit and what isn't, and have less opinions. It grows real old listening to 28-year-olds with fucking opinions when you haven't lived, you haven't done shit, don't know shit, haven't created shit, and yet you got all these opinions of the world. It's like talking to a 16-year-old. They think they know everything, right? They ain't lived long enough to know anything, but they got it all figured out. That's people when they come into the stock market. They come in here with all kind of perceived ideas instead of just listening to the flow of the market. Market can only do three things. You know, and you say, people ask me all the time, what do you think about this? It don't matter what I think, man. I don't know what the fuck is going to happen. If I did, I'd be a billionaire. Like, nobody knows. The analysts don't know. You know, they can tell you what the price of a stock is. This is super important. They can tell you what the value of a stock is. That's the value of something like Tip Ranks or Morningstar or The Street, right? Or any Zacks, any number of other places that'll give you the value of a stock. And that's based on sales, earnings, projected earnings, what they think they're going to do, brand name, brand awareness. Like, they can come up with a formula that they learn in school. They go get finance degrees to learn how to do this. And they can sit down and say, this company, Uber, is worth $60, right? And so if we were to go in here and pull up Uber and go to Tip Ranks and pull it up, right? We go to Tip Ranks and we put in Uber, right? What's it going to tell us? So we put it in, and hold on here. What does it tell us about Uber? $61, right? Strong buy. Now, I think it's worth more than that, but I got it at 68. They got 61. They brought it down a little bit. Okay? Well, where's the price of it right now? If we go look, where's Uber right now? $30. Right? So what do we do with that? What do we do with that? Well, it's trading at half price, right? Does that mean it can't go to $10? No, it can go to $10. It could very easily go to $10. Is that going to change your opinion of the company? Is that going to change your opinion? Is that going to change your opinion? Does it go to $10? Does that make it less valuable to you or more valuable? A lot of people, the lower it goes, less valuable it comes to them. So what these charts do for us, and not infallible, what they do is give you a logical way to take the chaos of this day-to-day movement, the idiocy, and that's what it is, man. The day-to-day movement of price is just complete idiocy. It's irrational. It's the emotions of millions of people who get up every day, and there's people who get up to manipulate it. And there's forces and there's actors and there's people on a bigger scale than me and you. There's like Vladimir Putin. He could make Uber go down very easily. Launch a nuclear fucking weapon and watch what happens to the stock of Uber on Monday. What do you think would happen? It'd go down big time, right? So at that moment, if you wake up and this drops 10, 20%, what do? Well, you better figure that out right now. Like a plan for chaos, you need to have right now. Like right now, what is the plan for chaos? So if you wake up Monday and the war is escalated, and what's your plan? You know, what value do you place on your stock? And I'm not even talking from a trading perspective. I'm talking about from from, an investment perspective. What's your plan? You should have one, because it's going to happen. Maybe not this year, maybe not next year, but the idea that people sit on this many nuclear weapons and never one gets fired, it very easily could happen in your lifetime. It happened in our grandparents' lifetime. What do you think is going to happen to the stock market when that happens? Or another virus. Do you think that could happen? Of course. So when that happens, we have to trust or believe in the fundamentals of a company. I listened to an influencer say yesterday or the other day that some people are holding stocks based on fundamentals even when the technicals show that it's going down. Yeah, bro. That even when... we won't get into that. So let's pull Pepsi back up for a second. So as we're looking at this with Pepsi, one of the fundamental beliefs of the money flow is that price has memory. That where price has been before, price tends to stop. And as price flows through these 4 stages of movement, it'll flow, you'll see it, it'll try to go sideways, and then it'll start to go up, and then it'll start to go sideways, right? And then it started, and then what? Then it took back off, and then it'll start to go sideways, right? And this is what price does. And it's not moving perfect, but you'll see, and sometimes it'll be exactly perfect where it does this. It just moves like this, right? And in a perfect world, that's the money flow. Price is moving sideways, drifting higher, moving sideways, drifting down, moving sideways. And based on your trading strategy or whatever your plan is or whatever you're doing would determine what you would do on what I call the breakout and what I would call the breakdown. And if you're looking at the pattern right here, that's the pattern. And for me, a breakout is price coming out of a stage 1, which, we'll get into that. And then price moves above the 20-day moving average, which is this over here, this green line, right? And this is just a simple moving average, 20 days. And to me, if price forms a box and then breaks above that, I would classify that as a breakout. Price is breaking out. Price is moving. And my basic belief is that price continues to do that until it hits a force that makes it stop. Well, we can add indicators and this and that, and they do. And we have this indicator up here called the RSI. Not perfect by any stretch of the imagination, but the RSI tends, when it ticks above what is labeled by most people the 70 line, or we call that, and these can be adjusted, we call this the extreme. These are extreme levels. And when price hits extreme levels, we anticipate that price is probably going to stop going up and then start to drift down, or at the very least start to drift sideways. So if I'm a trader, I would want to know that so that I could buy and then start selling in a perfect world, which would be right there. And as a trader, guess what? Price can continue to drift higher, and that may or may not have anything to do with you. When you flip a house, guess what? Next year, it's fucking more. And the year after, it's probably costs more. And the year after, it probably costs more. And a house flipper doesn't go, damn, I shouldn't have flipped the house. Why? Because they know what they're doing. They are house flippers. So you have to get real clear as to what you're doing, Are you trading? If you're trading, then you have to, put rules in for yourself. Now, part of trading, guess what? There's going to be a lot of ins and outs. You're going to get stopped out a lot. See, I would be stopped out here if I was trading, because what? It's closing. It's now moving below. Price is moving below the 20-day moving average, going into what I would call a stage 4 decline. But guess what? It could start to do that, stop, start going sideways, and break out again. Right. That's why trading's hard. Because if it was perfect, if it just did this every fucking time on cue, we would all be rich. Because it would be very, very, very easy, but it's not, right? And so all we can do each day is take what we see price doing and line it up with what we see, you know. And so I like the big picture for me, one of the 10 pillars of success, I think it's pillar 7 or 8, see the big picture. So for me, when it comes to stocks, the big picture is stocks go up 70% of the time. They go up. They drift higher and higher and higher. Do every single stock in the stock market do that? No. The smaller the company, the less established the company, right? The more what we might call speculative the company, guess what? The more risk you take, the bigger the returns can be, but also bigger the losses, right? So one of the things that we can do with the stock market, I had a guy the other day I was talking to, and you might be on here. And he said, I would like, so by the way, if we look at, this is Pepsi. By the way, if you look at the RSI up here, it just went below 30, which is the extreme zone to the downside. Well, we saw what happened here on the extreme zone to the high side, right? It stopped going up. Now we have an extreme to the downside, and there's our lowest low. And I would call this a completed move from one extreme to another extreme. And so now what am I looking for? I'm probably, nobody cares about BL. Man, stop asking me about your stupid stocks. You're in fucking church right now and you want to ask, let's stop the whole service for you, sir. How about you just be quiet and listen? How about that? As we come across, has price ever been here before? Yes. Has price ever stopped here before? Oh yeah, see it? So price has stopped here before. So, boom, now we got a couple things lining up. One, this is a zone where previous resistance, a lot of times previous resistance becomes support, right? And the RSI just went extreme. So we have a move from previous high to a low. So what am I anticipating to happen? I don't know yet. I'm expecting it to start going sideways. And when that does, what is that setting up? That would be a stage 1. But it has to confirm. And so inside of each of these stages, there's rules that help me determine if this is a stage 1. I need 4 days at a minimum where price stops dropping for 4 days. And then I could say, hey, looks to be there's accumulation. Accumulation means there's more buyers than sellers, or not more, but they're willing to pay more, enough to keep the price from dropping, that it now begins to drift higher or sideways, usually sideways, and then it'll turn and start to move up. And that is, I had a good example here. We'll look at probability theory. Let's see. And see, and I would even disagree there that I don't know the probability. I just know what it looks like when it stops. And you say, well, what if it goes sideways and goes down again? Okay, another stage 4 has continued. I actually don't know. What I do know is if I'm trying to invest, I want to buy stage 1s. I want to try to buy the lowest low I can possibly buy. I want to buy fear. I want, right? And one of the nicknames of the RSI is the fear gauge. When people are fearful, this goes below 30. When people are greedy, it goes above 70. So as an investor, I want to buy fear, right? But I don't want to just buy it because it's going down. I don't want to catch a falling knife. I need some evidence. Some evidence. In 4 days, it's almost a week, where price stopped falling and began to go sideways, which we would call accumulation. Right? In an example over here, you saw accumulation. Price started going sideways. The moment I have sideways, I'm looking for what I call a box, meaning I can very easily draw it and make it look like a box. Right? And we know what? What do we know on a breakout? The 5-day exponential moving average is not so much about the crossover as it moves to this side of the green line. It's not really the crossover that's important. It's that the minor moving averages are now on that side of the 20-day moving average. They're on this side, right? They're on this side of the 20-day moving average. As long as these moving averages stay on this side, price will just continue to drift higher and higher and higher and higher until what? It doesn't. What happens usually when it doesn't? First thing that usually happens, we start getting extreme readings on the RSI. And what is that? Greed. Prices have drifted too far. But really with the RSI, some people say it's a fear greed gauge, maybe. But what it really is it's just measuring the velocity of price. Prices move too far too fast, meaning based on the past, this is where people tend to, especially short-term traders, swing traders and whatnot, they tend to start taking profits, which causes price to what? Stop going up. And what? Starts to go sideways. Now notice those moving averages. Look how sideways they are. Do you see it when you look at that? When you sit and look at that? And so very clearly, we got an anchor point and what? We draw a line, right? Whenever I have an anchor point, and as long as price stays under this line, you start to see a box form, right? And you see where it tried to pop above it and came immediately back down. Very bearish sun. Price began to go sideways, right? Now, when it started to turn, and it did start to turn, it didn't keep going down. And so if you look at the money flow pattern, what is the pattern? The pattern is sideways, up, sideways, down, right? This is why I tell you can't just short because of that, man. You got to go look at the overall market. Is the market in an uptrend or is the market in a downtrend? You don't want to short stocks when the market's in an uptrend. You want to short stocks when the market's in a downtrend where the wind is at your back, right? So if you're a short seller, now's the time you should be making your money. Now's the time you'd be making your money. But what happened? Right there, breakout. It's back on again, right? So if we're looking, this stage 4 didn't last long, few days, started going sideways again, which is what? Stage 1. So not all stage 1s are in extreme zones, but the ones that I like as an investor, I want to buy stage 1s. And if I was going to sell, what would I want to sell? Or trim would be stage 3s. So buyer, seller. Now, some people get it backwards. There's sellers down here and then trying to buy up here, right? That's not what you want to do. So an example of stocks we might be selling or recently we're selling, trimming, taking profits, LMT, right? Beautiful run. And a lot of times when a stock gets going, if you've got my video, either my boot camp course or getting started with stock charts, talk about the runaway. And a runaway is a stock typically that's undervalued. It has a nice move, starts to go sideways, starts to sell it, but then it doesn't. And then it just rips higher again. These can be hard to trade unless you're super nimble. If you're super nimble, these can make you a lot of money. They can be hard to trade. As a position trader, it shouldn't be a big problem for you. Meaning, as this moved higher, you would have taken some off. Remember, I looked to trim the position into this green, and it kept higher. Good, let it drift. Let it drift. So we have to decide, how are we trading this particular stock, and the market condition isn't what I use to determine that. I determine that when I buy the stock. What is it I'm doing here? So we bought LMT or added it to the money flow portfolio back over here. They missed earnings. The stock fell from, what was it, 375 to like 320. It knocked off $50 on the stock. But when do I want to buy it? Remember what I said? I need what? I need 4 days where the price is not going down. I need it to go sideways. We actually bought right there. Price broke above the 5, the trigger. 5-day exponential moving average is the trigger for stage 1 and stage 2. Boom, there's our buy signal. It's a buy and holder. Now we are adding this to our buy and hold. So the next time I add, right, I'm only looking to add on 2 places, stage 1s and breakouts. I'm not a big fan of adding on buy and hold on breakouts, but I will. If it's still undervalued, if a stock is significantly undervalued and it's breaking out, that's what that is telling me. The breakout is telling me this is your last day to buy it at these prices. That's what the stage 2 breakout means to me, is the last day possibly to buy it at these positions. Well, what if you have a bunch of it? What if you're sitting on a nice position and you're happy? Then you do nothing. You what? You let it run. Gets up to stage 3, which is what? RSI is going to be extreme. Price stops climbing, starts to go sideways. Then what? Then what? You would trim it if that's the goal. Well, what if you don't have enough? Well, then you wouldn't worry about that. You wouldn't worry about it. You just let it go, right? Now, I trimmed some of this off even though I'm not in a full position because I think the stock is overvalued here. You say, well, how do you know that? Well, look, what do they think it's worth? Now, we're in a time of war, so they're giving them a little bit, it could trade at a premium. They think the stock's worth $445. All right. Where's it at? Well, up in there, we were trimming some. Why? It's overvalued. Or fair valued, let me say. Stock is now fair valued. Right? So what could we do with that? So this is not predictive. I'm not predicting any of this. I'm wanting to buy stage 1s. I want to be a person that accumulates down here. I could add on a breakout if you wanted, right? You could. And then what? I want to sell, a person that sells into strength if I want to take gains. If I wanted to. What if the position's small? Then I wouldn't. I would just wait. Maybe it's a year from now. A year from now, this stock sells off. They all do. This is why I tell people, do not buy IPOs. You're an idiot if you buy it. Let me just say it clearly. If you buy IPOs, you are an idiot, period. Just write it on your forehead. Put it in your mirror. Post it. They all come down. Name one IPO right now. Revvion, all of them come down. These are meme chasers. If that's your business, that's the game you're in, then do it. Don't listen to me. All right? But very few people succeed at that. So what I'm in the business of is showing average people how to accumulate wealth and how to get rich. And doing that is not a way. The very few people successfully pull that off. And I know because I've been trading long enough, I can just sit back and watch. And I've watched time. And anybody that was buying IPOs, if they just waited 6 months to a year, they'd get the stock half price usually. And you could buy it on a stage 1. All of them are a good example. Hood. Remember when ARK was buying Hood? Idiots. Coinbase, Dash, Uber, Facebook, Amazon. The whole list of them. All stocks. If you buy the IPO, complete stupid move. And yet every IPO, people come on my Instagram, come on you. What do you think about this IPO? And I know you just got in the stock market or you're just stupid. One or the other. I don't know. You're one or the other. You just came in or you're just a glutton for punishment. Because anybody who's been in for a minute will not buy an IPO. They just won't, man. And a lot of these mistakes that you'll make, I'll make, these aren't unique to us. Meaning any that you're going to make, I probably made. That's why I'm saying don't do that. Because I made it. And that's the definition of wisdom, man. To be able to watch, see what other people have done, and then, which is like, meaning don't have a lot of opinions. Just watch. So you might have an opinion that, man, the economy's fucked. Because I hear this a lot from amateur economists now. A lot of amateur economists. Now, they didn't study finance in school, but they watched a lot of YouTube. And they're like, man, if you read the Bible and you watch YouTube, man, you'll be like, man, this is bad. This is bad, man. I have a close friend. We're going to World War III. Really? You think so? Yeah, man, I do. Well, what do you want to do? I was going to sell all my investments. Really? You going to do that? Then you think, what would Warren Buffett do? Is he selling all his investments? He's like, no. Then why are you doing it? You know, remember when they say that, what would Jesus do? You know, ask yourself what other smart people are doing. Not weird YouTubers, not people that spread fear for a living. I mean, actual, real, legitimate, rich people. What are they doing? What would Buffett do? Is he liquidating his portfolio? No. You know, is he listening to Alex Jones? No. Right? So we have to be wise, man. You're called to be a steward of your money. And you can't play into that fear, man. I can't even go on YouTube anymore, man. It's so bad. You guys watch some stupid people. I mean, just dumb. Not that they're intellectually dumb, but they're just manipulating people with their fear, man. Yeah, we could go down the list of everyone buying IPOs and they'll tell you how dumb it was. Paul says, can you explain why you trim at 70% RI and not rebuy it back, Paul? Because I don't know that it's going to go down. You must have just came into class. I'm not predicting price when I trim. Just because something hits a 70 RSI does not mean it's going down. Here's an example right here, LMT. It hit a 70 RSI and it kept going. The reason we don't sell it all if you're position trading is you want to get fucking rich. And you can't get rich selling things. You get rich owning things. I know that confused most of the people. Let me say it slower for the stoners in the very back of the classroom. You cannot get rich selling things. You get rich buying things. I didn't say you can't make money. You can make all kind of money flipping things, trading in and out. You can make money, all right? But if you want to get rich, you trade around it, right? So you take some off on the 70 RSI and then what? Put that money to work in something on sale. Well, in the meantime, look what's happened. It's gone higher and higher. What are you going to sell it all here? Well, you can't do that if you sold it all here, right? Now, in this scenario, it worked out perfect. Look, RSI went extreme. Price dropped $50. I don't need to worry about this little fall here. If I trim some here and then it fell $50, good. I know what to do. Start loading it back up, man, right? And so as a portfolio manager, James says, is there any source of knowledge you got also from, yeah, right here, James, called fucking stock charts. Everybody else is just a fucking opinion. You don't remember Warren Buffett's one of the greatest investors ever, sold Delta at the bottom. So anybody's thing is just a fucking opinion. You can just come look at the damn stock chart and it'll tell you what it's doing. Where's the S&P going? Down. So what if I go, well, I think it's going up. Doesn't matter. It's going down. Did you see it Friday? So you could go look and see, well, what does Ray Dalio think? It don't matter. It's going down. Well, guess what? Let's say Ray Dalio thinks it's going up. Okay. Well, when will we know it goes up? It'll stop dropping. It'll stop dropping and it'll start to go sideways. And you're saying, Gerald, you're saying that the S&P 500 will stop dropping and start to go sideways? Yes. And then it'll break out. Did I need anybody's opinion to tell me this is a breakout? No. The stock chart told me it was a fucking breakout. And when this stock breaks out right here, when the S&P 500 breaks out, you're going to have a whole line of really smart people telling you this is a faint breakout. This is what they call a dead cat bounce. Like, this is what's going to happen. You're going to have a ton of people telling you that stuff. You're going to have all kinds of smart people going, don't buy the S&P 500. And then what? It'll drift higher, and then you won't hear from those people again. Then what? There's 70 RSI, right? There's 70 RSI. I don't know what's wrong with, maybe it's my phone, man. So, it's unfortunate Instagram has to freeze up on me, man. Why are you freezing up on me, Instagram? What's wrong with you? Anyway, man. So, we hit the RSI. Price starts to go sideways, right? Comes down. How far down is it going to go? We have no idea. We assume where price has been before, probably where it's going. Meaning what? So as you learn to draw these support and resistance lines, previous resistance, you draw your lines out, often becomes support on the way down. If that breaks, what do I assume? It's going to the next one, right? And, man, my connection here at the beach condo is up and down, man. It's driving me nuts. Yeah, so Paul, get rid of the idea that you can do that. If you are swing trading, then what Paul said is true. You would get in at the 30, you would get out. You would get in, and then you would get out at the 70 RSI. You would start downsizing the position, and then you'd wait for the complete rollover. And if that's how you want to trade, that's fine. Don't call yourself an investor. You're not investing. You're swing trading, which is totally fine if that is the game plan. I don't know a lot of rich swing traders. I know a lot of rich investors. Now, I know some rich investors that from time to time take swing trades. I do that. And you'll find as you get older and get more and more money, the rapid movement of things just doesn't interest you anymore because you are able to sit back and see where the big money comes from. And the big money comes from buying Ford at $4 and riding it to 25. This is why you see Carl Icahn and them doing that. They're not fucking algorithmic trading. Not to say they might not have a section or a part that does that, but that's not how they're making their big money. Big money's coming from taking large positions in very undervalued things and then riding them for huge gains. Let's see. Those bastards ended my video, man. Oh, Instagram just says I have no internet connection. You guys can still hear me on YouTube? Huh. Yeah, it says no internet. What the hell, dude? I wonder why it's doing that. You know what I probably need to do? All right, well, that's probably enough on Instagram anyway. It's either this phone or it's weird. At this condo, there's two different internet connections, the old and the new. Said the devil was at work, huh? Well, I won't keep babbling today. I'm going to be honest, man, as I went through charts, they all look terrible. The only stocks in the stock market that even look like that are decent right now is still oil stocks. They're obviously too high to buy, the XLE. Let's do that. If we just let's go through these sectors real quick. They all look terrible, man. Let's see. Where the hell is my... Oh, jeez. Couldn't see. Blow this up a little bit. Yeah, so insurance, stage 4, maybe stage 1. Now the home builder, the XHB, this could be a spot where we look for some stocks, man. I don't know if you've looked at those, but they've been going down. They might have bottomed here. So if you get inside and look inside of this XHB, which is the Spider S&P Home Builders ETF, we might find some shit in there. And this is how if I'm looking for swing trades, this is one of the ways I do it. I get in here and I look at these index ETFs or these sector ETFs like the home builders. Could be putting in a bottom. I don't know. We'll see. What do we got? Materials. So a lot of these look like they want to put in a bottom, but all of them are trading below the 20. And, the moving averages are still on the wrong side of the 20. Could it be bottoms? Maybe, man. We'll see. I mean, look at this. This looks terrible. The XLC, communications, down. Obviously, the only ones going up right now are energy, XLE. Can't buy it here. Way past a buy zone. And for my friend Paul on here, this is one of the reasons, man. Depending on how you're trading, yeah, you could have got in here and got out here, but if you're position trading, you really want to let those stocks drift. Just let them go higher and higher and higher because they're going to make up for all these losers if you let them. XLF financials look terrible. Like everything is pointing down, man. We'll see where industrials XL. This started to come to life. They've been trying to break above the 20 and come down. And if you notice, the sector indexes the charts don't look as pretty, right? The patterns. But if you get and look at the top 5 stocks inside of the XLI, you'll probably find patterns that look better. XLK's technology looks terrible. Still holding the February 24th lows, but look terrible. XLP looks awful. Look at this, straight down. The target, it could go lower. XLP are consumer staples. This is obviously having an inflationary effect, right? These are the Procter and Gamble's, the Pepsi's, the Coca-Colas, the Walmart, like that kind of shit. Staples are the things we all need. Staples are coming down. If you're a long-term investor, that's good. You need them to come down. What do you want to pay? $90? Especially in your 20s. If you're doing long-term investing, this is good for you. Just let it come down. Let it hit these buy. I mean, that's all I'm doing. I'm agnostic. I don't care up, down. I'm buying stage ones. I have a very long. You say, well, what's your time frame? Eternity. I don't have a time frame, man. I'm not investing so that I can be 65 and have money. I'm investing forever. So the XLRE, the real estate sector, is trying to break out. That has a lot of mortgage-backed securities. When we get into that, you'll see those are starting to try to break out, some of them. XLRE. The utilities, we already got in this one, though. Tagged our target. Now we're at maybe 70% of the position, and we're waiting to see. And this one, Paul, you asked about that. This did both. It hit the previous high. We're in this trade. We're in the triple leverage, though. It hit the previous high, right? And the RSI went extreme. Should we sell it all here? No. We sold some, and we're going to let it and see. Maybe it'll drift higher and higher and higher and higher, and that'll give us money to buy it. And we'll trim it as it goes higher and higher. We'll just trim out, and that'll give us money to buy maybe some consumer staples that are going down. Healthcare doesn't look too bad. Nice support level. The XLV, you could break that down, get in there. Pfizer, Merck, some of those look good. XLY discretionary looks like shit, dude. Yeah, so I don't know, man. We'll see. This is all dependent on what happens in Europe right now. Yeah, basically that's it, man. Yeah, but I get what you're saying about Boxel and the tip. Tip rate, all the price targets on penny stocks and biotechs. I mean, it ain't gonna mean, none of that's gonna mean shit right now, dude. They're not going to that price anytime soon. I like these stocks too, but honestly, I don't see them going up anytime soon. I would be targeting the stocks that look like they might turn up. the Pfizer's. I mean, Pfizer's a stage 2 breakout right now. You know, we were talking about this on the YouTubes during the week. This is a breakout, man. Instead of continuously buying penny stocks, let's buy the stocks going up. You know, there's a breakout. Where's our first target? You know, I would hold them. I'm not selling any of my pennies right now, but I'm not adding to any of them. Not in any kind of significant volume. Not when I can buy shit that's going up. Like, this is going up. And it's undervalued. It's worth $60. Pays a dividend. I just do not see big money taking risk on low cap, unprofitable companies when you have a company paying a big fat dividend that's undervalued by like 20%. Like, I mean, if you got a lot of money, what do you want to buy? A company that'll pay you money to own it that's undervalued 20%, or, you know, even I love Uber. I don't see it catching a bid anytime soon. I really don't. I don't think any of them are. Could be wrong. I hope I'm wrong. You know, again, like I said at the beginning, my opinion don't really mean shit. The stocks will tell us. But we're seeing Pfizer is trying to break out, right? What else did we see trying to break out? Where's Merck? You know, Merck was trying to push out. And if you look at these money flow patterns on these, they look pretty good, man. Sideways up, gets a little funky there, down. Sideways up, sideways down, sideways. Now what? We're trying to break out. And if you look at the Pfizer, what do you see? I mean, these are pretty strong money flow patterns. You know, you don't have to make your money back in the same stocks, man. You can just own a stock and start buying another one. I mean, so I got a pretty large position in Pfizer, so I didn't add, but, you know, looks pretty good. And there's a handful of these that are, you know, seem to be breaking the trend. Yeah, they're not going to go up, though, if the rest of the market keeps going down. So we'll see. Yeah, he's been adding to Pfizer. There's a ton of these pennies I like that they just won't get going, man. I like Solo here. It's tried. We had a big break and then it came back down. I think it's stupid cheap here. We had Pola. I trimmed some of this. We had a huge move up. Pola was up like 50, 60%, tagged previous high. So look at this. I mean, you can see where it stopped, man. If you draw a line on the previous high, look at that. Bam. And look at the RSI. Like, if you have any doubt in these indicators, it literally hit a 70 RSI and stopped. So what does that tell you? I mean, it hit it and stopped. Bam. And that's why I began to develop these rules for myself, is whatever was previous low, not 100%, but it just gave me order out of chaos, meaning price is fucking chaotic. And I'm like, well, if it stopped here before and then it held it again and again, it's very likely to do it again. And that tells me, well, there's a bottom, right? Well, if it stopped here before, that gives me a target. So now I have a bottom and I have a target. And see how now I'm starting to make a little order out of chaos. And and you say, well, what if it runs? Well, the RSI is going to help us there. And we can, you can use that too. Take any chart and just go back. We'll go back to the Pfizer one. It's probably a cleaner chart, but if we just go back, and you can ask yourself, okay, wow, look at this one. It was banging. Look how far it ran, though. Isn't that crazy? That whole move there was in the extreme zone. So yeah, maybe you took some off, right? But what happens then? This is why we want to let them keep running, right? Because if this is where the 5-day and the 10-day come in, and if they don't cross, if they don't turn, this thing will just keep going, man. It's only when they started to turn, right here, that it even began to slow down. Same thing up here. Look, it wasn't until they started to cross. Same thing down here. It wasn't until they started to cross. So those 5-day and 10-day, they're like the canary in the coal mine. When they start to sing or turn sideways, probably let you know that run is coming to an end, or possibly coming to an end. If I've made a bunch of money, I probably should lock some in. And, yeah, man, this Pfizer chart, fuck, dude, this looks great. We should have just been in that. Yeah, makes a good point. With the market down right now, I'm trying to build larger position with stocks that I haven't bought before due to high prices. Absolutely. That's a great way to do it. And I'll end with this, just food for thought. Don't feel obligated to add to every stock you have that's down. You do not. You have your whole life, okay? And this is where people get stressed out. Oh, I got 30 stock. You do not have to add to a stock that's down. You can just own it. And you can say, to be honest, yeah, I'm down in this stock, but man, look at Dash. This is my chance. I wanted to buy the IPO at $100 more. Why not buy a little now? And so you buy a little of that. You don't have to add to a stock you're down. You're trading the balance, not the individual stocks. And maybe that stock doesn't turn. Maybe it turns in 6 months. I don't know. But yeah, he makes a good point. And if you look at my portfolio, you'll be like, why do you own Exxon, Chevron, and Conoco? Well, in one oil crash, I bought Exxon. In the next oil crash, a few years later, I bought Conoco. And then in the next oil crash, I bought Chevron. And, each crash, each subsequent sell-off where there was a stage one, maybe I bought one share of Exxon and two of Conoco. And I've just been doing that, and I've owned them 14, 15 years, right? Going forward. And so I built this one, I built that one, set the dividends to drip. Sometimes, I own both Coke and Pepsi. Why? Well, one crash, I bought Coke. One crash, I bought Pepsi. And, maybe Coke did well and was just drifting higher, and Pepsi missed earnings and came down and put in a stage one. I bought a little bit of that, right? I want to own so I want to own Facebook, Snapchat, and Twitter maybe. And you say, which one do you add to? Pick one. They're all going to go up together generally, but by having this variety in your portfolio, when one misses earnings, or one fires their CEO, or one has a misstep, or one messes up, or whatever, and it gets smashed and it sets up, you can nibble on it. And then just doing that going forward, maybe own Ford, GM, and Tesla. Fuck, you don't know who's going to win. You buy a little all of them. You buy Tesla when it's getting smashed, picked up Ford when it was getting smashed. And as you go forward in life, 5 years, 10 years, 15 years, 20 years, you don't have to move in and out. Like, you can just accumulate these things. I get asked all the time, which one's better, Bitcoin or Ethereum? I like both of them. Buy Bitcoin. Yeah, but what about it? Well, if it's on sale, maybe next time buy that one. I mean, you can't buy them all, but you can, over time, build it out. So since I've been trading crypto, we've had 350% crashes. So maybe this time I focus on Bitcoin. Guess what? I got a good feeling when we recover, there'll be another crash. Maybe then I'll buy some Ethereum. What you want to do is avoid all of this FOMO. There's no FOMO. So if we look at Bitcoin, you're going to have so many times to buy Bitcoin. I get asked all the time, every time Bitcoin runs up, did I miss it? Miss what? The big move. There's no big move. It's going to go up and down for the rest of your life. So if this asset is real, look at this pattern here. Look how money flow that was. My God. Right? If this is real, this is going to be happening your whole life. Here we got little small money flows, right? So if I just want to be an accumulator of stage ones, when it runs up into the 60s, I could trim a little, and then what? I don't know, buy a car. Keep it. Add it to stacks. Buy a house. So I've been accumulating Bitcoin down here. But and then when it runs to 60, every time people are like, did I miss it? Miss what? There's nothing to miss. It goes up, it goes sideways, it goes down, and it's going to do that your whole life, or it's not, and it's going to go to zero. So the way you play the Bitcoin, crypto, Ethereum, is you own enough. If it goes to zero, your life's not fucking ruined. That sucked. Same with a penny stock. Like, you don't have enough that it can destroy you. If you do, you don't own enough things. And from time to time, everything goes down. The entire planet goes down. All assets on planet Earth go down because people flee to cash. What if you already have cash? You don't need to flee to cash. You get to buy their assets. Oh, man. Good stuff, man. All right, I appreciate you guys, man. Hope that helped. A little out of whack because I'm mobile. I only got one screen here. I got less than I even have in New Orleans. So keep the faith. I have no idea about next week. It looks kind of ugly, I'm going to be honest. If you got some spec money, man, if you got money that you're willing to play with, there are a lot of good penny stocks on sale. I just haven't been recommending them because people cry so much. One that I've been accumulating as far as cryptos is DOT. And I'm accumulating this for a trade, and I plan to flip it at 30. Okay? I'm literally buying these every day, 3, 4, 5 coins. Every day I'm just buying DOT. 1 coin, 2 coins, 3 coins, whatever extra I got. I plan to sell them at $30. So this is a flip. I'm trying to make 50% or 100%. Almost 100. So that's a speculative. I have way more Bitcoin than I have DOT, but I do plan to flip this. Matic, or Polkadot, excuse me. I like Matic too, but this one here I really like. I like the project, think it could go higher, but what do I know? All right, man, appreciate you guys.